So the big question is this: how are real estate investors who don't have a ton of free time, don't have access to off-market deals, and didn't start life on third base, how do we grow a real estate business conservatively to support our families, finally leave the corporate rat race and build a legacy? That is the question, and this podcast will give you the answers. I'm Ed Mathews, and this is Real Estate Underground. This is the Real Estate Underground podcast show number 29.
Hey everybody, Ed Mathews here with the Real Estate Underground. I am really excited today as I am joined by my partner, my mentor, and my close friend, Rich Brown. Hello, Rich. How are you, sir?
Big Ed, how are you today, man? How's everything going?
I am totally blessed. This is, everybody should have my problems. It's a good day. So,
except for your Red Sox, but go ahead.
Yeah, well, isn't it basketball season yet?
So let's talk about today's guest.
Yes.
Today's guest, I'm really excited to introduce. So go ahead, man, you tell us.
So I've been looking forward to meeting this gentleman for quite some time. We've been following him for well over a year now, at least. So with us today is Brandon Cobb. He is CEO of HBG Capital and an expert real estate consultant and investor. He's been featured on REI Wealth Magazine as well as Forbes. And he's here to share some actionable advice about using real estate investing as a way to create passive income, something after my heart, how to hire A-plus rock stars, which is something I know we always are challenged by, and how to build the systems and processes to help you folks out in the audience to grow their businesses. Brandon, welcome to the show. Thank you so much. It's good to see you, my friend.
Ed, Rich, it's an honor. Thanks for having me.
Yeah, absolutely.
Thank you. Brandon, I'm going to jump right into it.
Thank you, sir.
You have a great background, but I think it's always best if you just tell us a little bit about your start, how you got into real estate, and how you got to kicking butt like you are right now.
Started out as a medical device sales rep. It was actually my dream job. I never had any dreams or aspirations to jump into real estate, to be honest with you. If you told me today that we were, building neighborhoods and targeting first-time home buyers and helping investors create passive income, I would have looked at you like you had six heads, and I would have bet every dime against you. So when I was in college, I always knew that I wanted to do medical device sales and really just worked for years to break into that industry. Finally broke in. Got my dream job. I was doing shoulders and knees. So worked with a lot of sports medicine doctors. I was in surgery every single day, working with the surgeons and the nurses. I was wearing scrubs. My products were being used in people's knees and shoulders. I mean, this was a pretty cool job for a guy in his, early 20s. I was excited about it and life was great. And then one Friday, I got sat down at Starbucks after a successful surgery of this doctor I was courting. I was trying to get his business. And my boss fired me out of the blue. And it was one of those things came out of left field. I had these nice sales awards that I'd been given not too long ago, and just complete shock. I didn't really know what to do. And that's at that point, I really realized that nobody was going to take care of my finances for me. You can be as loyal as you want to these bigger companies. You can work as hard as you want, put in the hours, build the right relationships. And at the end of the day, the sad thing is you're just a number and there's no hard feelings. He did whatever he had to do. And that's really what set me on the entrepreneur path. I'm not a natural entrepreneur. I would have worked for forever for that company, but I was fired and I was sort of forced into it. And at that point I said, well, I'd done a really good job of living below my means. I had some money saved up and I gave myself a 6 months ultimatum. I said, hey, figure out a way in the next 6 months to make some money for yourself. If you do, keep doing it. If you don't, just go back and get another job. That was the worst case scenario. And that's exactly what I did. Now I had a motivational blog that failed. Had a coaching business that I was trying to get up and running that failed. I was doing real estate at the same time. And I ended up flipping one house that closed 3 weeks before month ultimatum. And I made like $16,000 on it.
Boom.
And that's how I got into real estate and got started. And from there, it just kind of snowballed.
Right on. Wow. Well, that's fantastic. So you occupy a really interesting niche. And in fact, I actually saw an article on, was it 60 Minutes, talking about institutional money going into the single family rental business and how heavy they've gone in, particularly in your neck of the woods, as a matter of fact. So I'm fascinated by your business and how you compete with the gigantic companies that are in your space. And I know you're thriving. So tell us about your business and what you're doing.
Our company's HBG Capital. We work with investors and assist them to help build their legacy, achieve their dreams, and impact those around them through unique real estate investments. Right now, we see a really unique opportunity in the market around homes that are targeting first-time home buyers. I think there's no surprise. Everyone's seeing on the news every single day that there's a lack of affordable housing. And affordable housing is a unique term. When I say affordable housing, I'm not necessarily referring to Section 8 or government housing. I'm talking about homes for starter families, people who are looking to start a family, or maybe they have one or two kids. They need that entry-level starter home. They're blue-collar workers, combined income. They're in that $300,000 to $385,000 price range. That's where we want to be right now in certain cities. So that's what we're really focused on. We see an opportunity there. We think whatever happens with the economy, people tend to shift into those more affordable living arrangements.
Absolutely.
The need to live doesn't go away. And so we think that this asset class gives us a lot of stability. We manage everything from start to finish so that we can control it and reduce the risk of a builder that we hire going belly up or something like that. So our goal is to try to control the investment as much as humanly possible, all the way from the acquisition, getting it off market, to selling it on the back end. We control that entire process. And you're right, there's a ton of opportunity right now with the build to rent. I had 6 hedge funds call me in Q4 last year. Never had a hedge fund call me my entire life. I was like, what the heck's going on right here? And I can't speak to the reason why the build to rent phenomenon is happening. I can speculate like everybody else, but I know that it does present a huge opportunity, not just for us to be able to sell our products to a bigger entity instead of dealing with hundreds of individualized transactions. That's one huge advantage of this. But really, it's being able to diversify. So there's no one exit strategy anymore, right? We're not just selling to consumers. We are able to compete with these bigger guys. And really where we're able to differentiate, it's with the relationships and the systems and processes we've built to be able to find a lot of these off-market opportunities. If you're a big Wall Street hedge fund, you're not as concerned about going out and setting up individual micro businesses in all these different markets. You want to figure out who's finding the deals and buy them from them, like what we're doing. So it took us years to be able to cultivate the relationship with the planning departments, the mayors, all the local residents that own a lot of land that we can entitle and add value to. So really we differentiate because we're in those circles and we've built those relationships with the sellers that trust us, that own a lot of land. We add value to them through the entitlement process and possibly sell it to some of these bigger build to rent funds. Everything we do is off market, and that allows us to be very competitive and control our deal flow.
And so I imagine you're selling to those guys, or at least in part, but when you sell to an end consumer, are you also carrying the note, or how does that part work?
No, so everything we do is build to sell. So we build it. We're actually not holding any inventory for ourselves. Like I said, that I've ran the numbers. It doesn't make sense for us to hold all of our own stuff at the rent rates again, but I'm not Wall Street. I don't have some quant that's much, much smarter than I am sitting in a room full of numbers. I think their plan is more long-term, but we sell off everything. So historically, we've always sold it to individual consumers. So first-time home buyer families. Now we've got some bigger stuff that we're actually looking at putting it under contract with some build rent funds.
Yeah. So in terms of carrying the mortgage, are folks coming to the table pre-approved with a mortgage through a different bank, or is any part of your offering around actually offering the mortgage part of this as well?
Stay with us. We'll be right back. A motivated seller just filled out your web form. If you call back within 5 minutes, you're nearly 4 times more likely to get that seller appointment. But delay your follow-up by even just 10 minutes? Forget it. You're toast. Ella Vista Connect calls that lead back in 60 seconds, qualifies them, and schedules your meeting. Find out how much slow follow-up is costing you. Free calculator at ellavista.com/underground.
We build and finance everything ourselves. So we're the developer and we're the builder. We're not building for each individual consumer, right? We're not like a custom home builder where they get to pick everything out. We build the whole home and then we put it on the market, and then that's how we sell it.
Got it. Makes sense.
So Brandon, you talk about your systems. I know that one of the challenges a lot of builders have had is controlling costs. Would getting goods in because of the supply chain issues. How have you guys been able to manage that?
It's been tough. And we had some areas where we got hit with 15, 20% price increases. What we've done now to mitigate that is we do an extra raise when we syndicate a particular development. We raise extra money to buy most of the materials up front. And then we've got 2 warehouse locations where we're storing those materials. That way we've locked in pricing. And so we're not 3, 4, 5 months down on a job and get a huge increase in what the price of materials have done and then get caught with our pants down. That's really the only way I know how to mitigate it, because construction material costs are so volatile right now. If you don't buy all your materials or most of them up front, something's going to happen to those prices. So that's what we're doing to mitigate it. As far as the supply chain issues, same thing. We're buying everything ahead of time and we're storing it in a warehouse that we control. Stuff like windows, doors, appliances that are taking forever and have a really serious backlog. We're buying extra of it and we're storing it at these locations so it's available when we need it.
Brilliant.
Very smart. Just so our audience understands, tell us, what markets are you in? Or do you plan to expand? Are you pretty locked in to where you are?
Right now, we're on track to do about 66 homes this year. We think that we can easily grow it to 300 homes a year here in Nashville, Tennessee, and the surrounding suburbs. We really like Nashville. There's some other markets I do like, but I don't see us transitioning anytime soon because there's so much opportunity in Nashville. The reason we're so bullish on Nashville is it's been one of the fastest growing cities in the last 10 years, probably top 10 at least. There's been a great migration from these very high tax states like California and New York. People want to come here. They want to set their business because they're not taxed as high as some of these more higher tax states. We like that. There is a ton of local tax incentives that local politicians are giving to a lot of the investors and the builders and developers and the businesses that are moving here. So all these things are fueling a lot of growth for Middle Tennessee. It also is still relatively affordable compared to the rest of the country. As you and I know, when you've got these contractions in the economy, people tend to pivot to the more affordable areas. Not the class D and F and I'm going to get shot areas, but areas where they feel safe, but they have that affordability. And Nashville is still that, especially the surrounding suburbs. Davidson County has gotten really expensive. I would no longer call Davidson County or the Nashville core affordable compared to the rest of the country. But after COVID happened, there is a huge migration. I don't see the opportunity in the Nashville core anymore. It's all in the suburbs. Right. Everybody is wanting to live with a little bit of land, a little bit of room. They want the affordability. They don't have to drive downtown to sit in office anymore. And this has caused just an explosion in the surrounding areas in Nashville. There's so much opportunity there.
It's an amazing trend. We see the same thing here in Connecticut. And there was a gigantic migration out of the New York metro area and even Boston to a certain extent, because we're basically equidistant between the two major cities, and moving to the country, which, happens to be Connecticut. And so we saw the exact same thing. And the good and the bad of that, right? The supply chain, the supply and demand curve inverted basically, and inventory got gobbled up at record rates. And we're still sifting through that process. But the other side of it is, being a person who sells single family homes, the prices went parabolic. So It's been a fun ride.
It has. It's been a really fun ride. It's been pretty strong fundamentals, but there's going to be a lot of volatility, I think, in the future, because you have all these massive forces like inflation and low housing supply. You've got interest rates that are creeping up. I mean, there's a lot of stuff going on.
Yeah. And, it's interesting. I'm curious what your thoughts are on inflation and the climbing interest rates, since you brought that up, and the looming recession in terms of how it's going to affect your business.
Yeah. So I'd be lying to you to say if I had a crystal ball and I knew, right? And I tell people, if somebody says that they do know, that they're lying to you. Really, you can only see 4 to 6 months in the future. And that's without some crazy black swan event like a virus coming in and ruin everything, right? But right now, even with the interest rate hike, the housing market's still pretty strong. If you look at the starts back in 2008 to the number of housing starts now, we're almost like in par. We're a little bit over that. I mean, we've got such an under shortage of housing. It is insane. And again, a lot of this is first-time home buyers, right? That's who's driving the market. So that's where we want to be. I can tell you that when they crept up interest rates, the mortgages on a lot of our products, they only shot up a few $100s a month. It wasn't a significant increase, but a lot of builders that were building these $800, $900 million homes, a lot of their buyers were no longer qualified to buy those homes. And they're kind of cooking right now a little bit. They're getting a little bit nervous. So I think when we do have this contraction, which is good, quite frankly, like, guys, it's a recession. Like, this is normal. These things happen. It's not going to last forever. The economy needs to cool off. I hate when people freak out about recessions. Like, it's a natural progress and it needs some cooling off when you've had such a hot economy for so long. Right. But let's look at the fundamentals. The Fed has printed half the dollar bills that have ever been in existence since COVID. I mean, that's a lot of inflation. There's no wonder we're having like 8-9% inflation. I think it's personally probably a little bit higher because they manipulate the CPI index. But I mean, that's insane. You got to think, if you're a saver in 4 or 5 years, your income is going to be worth half if we still have this 10% crazy inflation. So that's going to infect things. It's going to increase the prices of the commodities. You've got gas that's experiencing the same thing. When gas goes up, everything goes up. So I think inflation is here to stay. And the only thing the Fed can really do to combat that is raise interest rates and put monetary policies in place. And those interest rates are going to pop a lot of the bubbles that they've created from all this loose, very low credit lending. So it's really interesting. If they keep increasing the interest rate, you got to think, I think they're going to pop a lot of these bubbles, but there are certain needs that are still going to be there, right? It doesn't stop people from going to the grocery store and getting groceries. Maybe they're no longer reaching for the steak. They're reaching for the hamburgers. Same thing with housing. That's a need that's going to continue to be there. And that's why we want to be in these first-time home buyer products where there's a lot of affordability, because people are just going to transition to that asset class as prices or interest rates continue to increase. That need to live doesn't go away. And that might be another reason why you're seeing such a huge demand for these build to rent products. People aren't able to afford homes. What do? They rent. When supply is way, way less than demand, you get crazy increases in the rent. So there's a lot of things, but I think overall the housing market is still positioned really well because you got one big fundamental value that is glaring at you: supply and demand. We've got no supply and high demand.
Absolutely. I couldn't agree more. I think, and you mentioned two kind of buzzwords that are getting thrown around here, and let's talk about both of them. So one is recession, right? So recession is a healthy cycle in a healthy market where you're looking at a 6, 8, 10, maybe 12% correction. That's normal. And frankly, from a real estate perspective, it means that folks like you and I, properties go on sale, right? And so it presents us with opportunities to acquire additional properties and then furnish them to our residents or our end consumers at an even better price, right? So everybody wins.
Yep, that's right.
Bubble, on the other hand, is another little more charged word, let's put it that way, because, when I hear bubble, I think Lehman Brothers declaring bankruptcy and the economy going off the cliff. And it doesn't necessarily mean that. I'm curious what your thoughts are.
Yeah, irrational exuberance, right? We've had the tulip mania bubble bubbles have been around for forever, right? So you got to think, like, what causes a bubble? And it's really emotional buying and euphoria, right? When people realize overnight, it's like, crap, I spent $300 on this tulip flower, everything exploded. Right. You had the crypto bubble. There's not a lot of intrinsic value yet behind it. And I'm talking about cryptocurrencies, not the blockchain, because, people go down this rabbit hole and they're probably a lot more experienced than me. But really, you got to think, like, what's the reason behind why you're buying it? If most people are buying it because it's on the news and it's sexy and it's cool and it's new, and that's the reason, and that's what's driving the demand for it up, well, then, yeah, you've got a bubble, and it can pop very easily because there's not a lot backing it. Where right now in the housing market, it's supply and demand. I mean, there's a very, very hard reason why the prices are going up. It's because there's very low supply and very high demand. I don't think there's a lot of irrational exuberance right now. I think that there's definitely people out there who are making some emotional decisions. They're like, oh, I got to buy now. But when you have 20 offers on a home, that's a very basic demand problem. So from a very baseline economic standpoint, you've got very low supply and you got very high demand. And so I don't think that we're in a housing bubble because of that reason.
I agree. I also don't think that the rental market, and in my world, right, that is also not necessarily in a bubble. Sure, we're going to run into a correction, but the fact is that we are in the single family homes. Last number I heard was in excess of 4 million units behind where we need to be in 2030. right? Is that number right?
We never caught up to 2008, 9, 10, and 11. I mean, so many builders and developers went out of business, or if they did stay in business, you got to think 80% of the homes that are built by mom and pop builders. Only 20% of homes that are built are by like Lennar and Goodall and these big national builders. So when the economy shifts, those smaller fish, they're the ones that get fried the first. We never caught up. That was 4 years of no inventory. And so we were catching up. And when COVID hit, all the factories shut down, all the builders just stopped, and everyone freaked out. And what happened? Nothing happened. At least with the housing market in single family, office space and retail, that's a completely different story in restaurants. But you had this situation where it just exacerbated the problem. And so we're trying to play catch up. There's so much housing that needs to get built. Now, I will say we watch the supply. We watch the number of starts. We're looking at the absorption rate. We're looking and tracking the days on market, because I think if we continue this trend where the supply chain starts to get caught up and we start overbuilding, I mean, you want to watch that, because that's a lot of inventory that could potentially hit the market. And then if you get a spike in interest rates at the same time, that's where you're going to feel a lot of the squeeze. So we're very careful. We try to track every statistic that we can to just make sure we're still on track and in a healthy market where we're not going to get caught with our pants down, basically.
Yeah. And perfect example was the one you gave earlier about the luxury homes, right? Homes in excess of $800,000 are slightly overbuilt. And so I was just reading an article maybe a day or two ago about how those luxury builders have taken a haircut in terms of their pricing. And you have to, right? You can't sit on that inventory. It's got to move.
Yeah, those are the canary in the coal mine. If you want to see the trickle effect, and the trickle effect, it's like a waterfall, right? When you get the market that affects you, you got all these buffers as the water hits the different rocks. The first one that always gets hit are your more expensive homes. So if you want to get an indicator of what might come to the lower price points, look at what's going on with the luxury price points, because those are the first ones that shift because your buyer pool is so much smaller.
Buying investment real estate is both thrilling and sometimes stressful. Without a lending expert by your side, most investors don't stand a chance. That's where CT REIA Funding comes in. CT REIA Funding was founded by investors to help investors just like you fund their deals. Whether you're buying a single-family rehab, an apartment building, or really any investment property, our team will understand your deal and help you close quickly. Go to ctreiafunding.com or call us at 860-876-0572.
One of the things that we were talking about earlier is your business, the operation itself. And so I want to get into how you look at your business. We were talking earlier about some of our favorite books, and I'm going to ask you that question a little bit, but I'm curious about how you view your role within the operation and the systems that you put in place to make your machine run.
Yeah, wow, we could talk for hours on this. So my job is here to serve. In my signature of my emails, it says, strategic legacy consultant, not just for the passive income investors that we serve, but also for our team. So I'm very in tune with what each individual organization wants to achieve outside of work. And part of our vision statement, which is what it all starts with. You want to do a top-down approach. What is your vision? Right. So we start every team meeting off with the vision, and then we build down from there. So for me, I'm here to serve everybody. I want to make sure that we're helping everybody achieve all their own individual goals outside of work. And I want to make sure that I give them the tools in order to succeed. Some of those tools are the EOS system that we use. So everyone's familiar with traction, EOS. We don't use just about everything, but you've got to be able to measure performance. Rock stars, which is what you should strive to hire when you're trying to grow a small business, you will not succeed without rock stars. The Who Not How book, the first thing we do in our hiring process is we look for people who can advise us on the position. If, for example, we're hiring a superintendent and this superintendent can't come in and look at the gaps and efficiencies in our process and start teaching us about how we should be doing it better, we don't hire that person. I call everybody in our organization strategic partners, not employees, because that's what they are. So that's most important. You've got to hire people who can teach you how to do the position better than what you're currently doing it. And so after we've made that hire, or we've got somebody who's a really good candidate, what we'll do is we do a typical phone interview. Do they have it, want it, and have the capacity to do it? So if they're not following up with us during the hiring process, that's a problem. If we don't feel like they understand it or have the capacity to do it, then we don't hire them. And the way that we pull out that information is through a behavioral style interview. So all of our questions are designed for them to tell stories around the skills that they have. Mm-hmm. So for example, I might ask the superintendent, tell me about a time where you had to fire a subcontractor and replace them. How did you do it? How did you go about finding the replacement? I want to hear stories about times that they've demonstrated things that I'm looking for. That's the best way. And then we always do a mock work day. So for a whole day, they'll come in and they'll actually work for a full day. And we want to see if they're a culture fit. And we want to see if they're going to get along with everybody. That's part of the hiring process. The next step is giving them the tools and the measurement statistics. So everybody has KPIs, key performance indicators that they have to hit on a weekly basis. The project managers have Gantt charts. They've got to adhere to the timelines. My executive assistant, we've got to have a certain number of intro calls set up every week. What this does is it gives people something to strive towards. And it tells you whether you're doing a good job or whether you're doing a bad job. Like I said, if you can't measure it, you can't grow it. So we want to make sure that everybody, we're hiring for values first and then skill set. We've got tracking mechanisms set up for each position that allows employees to have some autonomy and be able to measure their performance. And then we want to make sure that as we're rowing in the direction that we want towards the vision, that everybody has an oar and is rowing together. So we do quarterly rocks centered around the gaps and inefficiencies of our business. We'll sit down, and my job is just to sit down one-on-one with everybody and pull out what they feel like is inefficient. Are they using their time in the best way possible to make themselves most efficient? And if they're not, what can we get off their plate? And what can we do to put them in what we call their superpower? Like, what are they really good at? I'm really good at investor relations and raising money. I need to just do that, right? My partner, he's really good at finding deals. Oh my gosh, he's got more deals than we'll ever be able to fund right now. We want to clear everything off their plate and make sure that they're using their superpower every single day.
Highest and best use. Right on. That's fantastic. So in terms of the systems themselves, and you talk about how you lead the operation and make sure that everybody's rowing the same direction. Talk to me about documentation. Like, one of the things that we're always looking to do here at Clark Street, my company, is boil an operation down to checklists. And it really comes down to providing a guide for the folks that are executing. But more importantly, I think it's a good first step for folks that we're bringing in, because we're hiring like crazy right now. And I imagine you're probably in a similar situation, given that you're growing from 66 units to a goal of 300 units very soon. So what's your plan to help yourself scale?
Having onboarding guides, documenting everything that someone needs to do, that's really important. If there's a monotonous task, it needs to go in some kind of flow chart. Every single position either has an onboarding guide or it has a flow chart on how something should be done. But you have to be careful, because what you don't want to do is you don't want to feel like you're putting them in a box and they have to do every little thing just this way. You want to give them 80% of the information and let them figure out the remaining 20%. The most important thing when I'm delegating a task or putting something in the onboarding is you want it to be a little vague. You don't want to say, go here, do this, do that, and be like just super detailed, because then they can get bogged down in the weeds. It's, hey, I need you to go and take this hill. How you go and take this hill, if you're in combat, right? I love using military metaphors, like how the soldiers go and take the hill and get the enemy on that hill. Like, if you train them well enough and you give them the tools, they'll go figure it out. What you don't want to do is go around, go to this area, shoot this spot, throw a grenade here. Like, you don't want to get caught in the weeds like that. You want to make sure that you explain the overall why behind things. Otherwise, what you're going to do is you're going to create another job for yourself. And I've done that. And because I am super detail oriented and I like to know what's going on all the time. And that was a big issue, is like my EA would come to me and want approvals for all this stuff. She was scared that she was going to do it the wrong way. Right? Like, oh God, I want to make sure I do this right. We better get Brandon's approval on everything. And it basically created another job for me. So I had to transition my thinking and be like, all right, look, here's the tools, here's the why, here's the overall goal. How you accomplish that is your thing. An example would be like a charity thing that we're doing with one of the cities of White Bluff. Like, we're doing a donation, we're going to a golf tournament, we're setting this up. And I'm not going to explain to her, how we should set the booth up and how to interact, what stuff to get. All I'm saying is, hey, let's give everyone a great experience with our booth that we've got set up at this charity event. I don't care how you do it. That would be an example of some of the things that we're doing, but they do need an onboarding guide to explain how the software programs work, the KPIs, the expectations, kind of the nuts and bolts of the system. So make sure you're creating those onboarding guides.
Couldn't agree more. So I'd like to change the subject on you just a little bit, because one of the things that you mentioned is something that is near and dear to my job and my heart, and that is investor relations and raising capital. One of the things that is very difficult, and I find this, as we've kind of grown our business and raised money in our own way, a lot of the folks that we're talking with ask some really good questions, right? And it makes us smarter, and it sharpens iron, right? And so one of the things that we're always doing is keeping track of the questions that we get so that we make sure that we're on top of our business and are running it in line with what our investors are looking for in terms of returns, in terms of communications and transparency and all that. So I'm going to turn the tables on you just a little bit. Instead of telling me how you raise capital, tell me what is the most effective way to evaluate and do your due diligence on someone like you or me. And what are some of the questions you get that are insightful and helpful? Yeah.
So this is so important that we wrote a book on it, and you can grab that book at our website, hbgcapital.net. It's under the educational resources tab. It's 100 questions passive investors should be asking before investing. There's so many questions. It's really important because if you ask the right questions, this is what can prevent you from having a huge loss in your portfolio, or worse, losing all your money. I had a call from one guy who literally lost all his money lending it to who was a respected real estate investor in the market. And when he told me this story and what happened, I was seeing all the gaps and the things that he should have done. I was like, oh my God, this is just such a tragedy. So we wrote that book to prevent other people from losing their money. It's completely free, but there's two parts of the deal: the person and the deal itself. And both of them have to be good. You could have the most Jesus Christ himself could come down and you want to lend him money and he's a good person. He's never going to do anything wrong with that money. But if he doesn't have a good deal, then the whole thing stinks, and vice versa. You could have the best deal in the world, and if you've got a bad operator or a bad sponsor, the whole thing stinks. So there's two parts of it. One, without getting into the weeds, the main thing that you're looking for in the deal is what is going to have to happen for me to either lose my principal or take a hit on my principal. You're looking for equity. And this is going to depend on whether it's an apartment complex or a storage unit or a single family home, but whoever you're dealing with needs to explain that to you. So for ours, it's pretty simple. Hey, we're going to sell this house for $400,000. The break-even point where you just get your money back and don't make anything is $300,000. That's our cost basis with all the hard and soft costs. In order for you to lose all your money, the home would have to pretty much go to like zero, right? That's how we would structure something. It's the amount of equity. How much does that product type have to take a hit in order for your equity to get affected? And then how's the capital being managed? That's another important thing as well. What a lot of people don't realize is who they lend money to, like, is the money going into a bank account that's being commingled with a lot of other deals? Or is it going into its own separate bank account where it's being managed out of that one account? It's a big mistake I think people make. So looking at the deal, the equity, how the money is being managed is a great starting point for looking at the deal. As far as the person goes, you got to use your gut. I'm a big fan especially if you're thinking about investing large sums of money. I never invest like everything you're thinking about investing off the top. Get through a few cycles with a little bit of money first with somebody before you start upping it. Some of our investors started out with like 100, 200 grand, and they've got a couple million with us now because we've been through so many cycles together. Right. But you want to have multiple conversations with the operator. So like, for example, when people are courting us, we put out as much educational content as possible because the person who's going to win the business this day, I don't care if you're in a restaurant or you're an airline, it's who's providing the most value up front. That's how people make a purchase decision. So when you meet with people, meet with them 3 or 4 times. Follow up, ask questions, ask them the questions from the ebook on our website. Get a feel for, do you trust this person? And then we do a lot of tours in town, to be honest with you. And this is usually for the people who have the time to do it and come in, but they'll come in town. We'll give them a tour of all the properties. We'll show them the pro formas. We'll show them the margins. We always show them the past deals that we've done. So you want to make sure that they've got a track record. And so if you can go in and actually see some stuff, that's even better. You don't have to, and a lot of people don't. But again, the more touches that you can have with this person, asking the right questions is better. Asking them questions that you already know the answer to is also a really good thing, because then you can test their integrity out and see if they're lying to you.
Right. Excellent. So you clearly have a well-run operation. And I'm curious, one of the things that I'm always advocating is mentorship, right? In terms of both contribution to the community and the folks that you work with, right? It's kind of the next level of growth, but also from a, how did I get here perspective, right? In terms of, I've been blessed. I've had 4 or 5 really just exceptional human beings who, a couple of them took pity on me, a couple others saw something in me, and all of them wanted to help. And so they throw an arm around me and either kind of guide me to success or keep me from stubbing my toe. And I'm curious, in terms of your life and your professional growth, who were those people in your life? And more importantly, what was the best piece of advice you ever got?
Best piece of advice I ever got would be when I was first starting out: create the problem first and then solve it. I think the biggest obstacle to getting started is people think, oh, I can't go find a deal because I don't have the money, or I don't have the money, so I can't go find the deal, right? Just go. There's not one single deal we put under contract where we're like, we've got money sitting in the bank account for it. We create the problem and then we solve it. That's the best piece of advice I ever got, because I continue to follow that advice today. And that's what allows us to grow and get ready. You don't always have to feel completely ready in order to tackle something, because that's usually where the growth takes place, right? You're not ready. You're going to be challenged. You're going to be pushed outside of your comfort zone. Look for those moments. Notice the butterflies, because that's usually when the growth is about to start taking place. I went off on a tangent there. What was the original question?
What was the best advice you ever got?
Best advice I ever got. Yeah, that was the best advice that I've ever gotten. Yeah.
Yeah. Excellent. All right. So I'm a huge advocate, former English major, right? Huge advocate of reading and educating yourself and taking ownership of your education. And so my mantra is leaders are readers. How do you sharpen your own saw, right? How do you consume information? Is it books? Is it Audible? Is it podcasts? And I'm just curious, what's on your nightstand or your virtual nightstand these days? What are you reading?
I tend to obsess about a particular subject that creates a spark in my brain. And I'll read everything on that subject until I feel like I'm getting regurgitated or saturated information. In other words, the books are starting to overlap. I've found that I get the most pleasure from doing that. So right now, I am really focused on how do I create cash flow models, very sophisticated cash flow models in my business, where I can take this to, some institutional guys and really blow the whole thing up. So reading David Richter's Profit First for Real Estate, a lot of the stuff we were already doing, but was really impressed with the book and how it's set up. We ended up setting up a few additional bank accounts that, we didn't really think that we needed a bank account for like reserve funds, right? Never really thought about that. We didn't really think that we needed an income account that all the money can go into, and then we can properly allocate it based on percentages that a healthy business would be running. I thought this was really cool. So that's one book that I'm reading. I'm reading Life Force by Tony Robbins. It's a book about all of the really neat healthcare technology that's on the horizon and currently available. I actually just set up my cold plunge today. It came in the mail. I have a cold plunge. It's like this giant bath with freezing cold water that I'm going to get in every single morning. That's something else that I'm reading. And then I look for, the most important thing is not just reading for the sake of reading. I want something that's going to spark me. And what sparks me is usually what's like going on in my current life and my current situation. So right now I'm trying to take my health to the next level, and I'm obsessed about building these cash flow forecasts that I can go and I can take to some of these institutional guys and start doing some bigger deals.
Excellent. Excellent. All right, my friend. Well, hey, it's been a pleasure speaking with you. I am curious. So you're an obsessive personality, which I tend to gravitate towards myself. So I respect the hell out of that. But when you're not obsessing about real estate and your health, what do you like to do?
I'm a travel junkie. I took 60 days off work last year. I got to go to Dubai. I got to go to Baku. I got to go to Istanbul. Every single year, I do a trip with either close friends or family. So I've done a sibling trip with my brother and sister the past, I think it's 11 years now. Every year, we knock something off someone's bucket list. I'm taking my mom to St. Augustine. She's a history teacher. She loves history. There's a ton of history there. That's a bucket list thing for her. So my dad and I, we do a trip every single year. Again, it's a bucket list thing. My whole goal in life is to create unforgettable experiences with those close to me. So I love traveling. I love knocking stuff off my friends and family's bucket list. I love creating unique experiences. I'm pretty obsessed about it. I do a lot of that, whether it's staying in some really crazy getaway cabin that's, like out in the middle of nowhere and taking my fiance to it because she's always wanted to do that and making it a surprise. I love creating unique experiences and traveling.
Excellent. So if somebody wants to get a hold of you and talk about your business or learn more about your operation, what is the best way for them to get a hold of you?
Yeah. So if you're somebody who's interested in building your legacy, impacting those around you, if you're trying to focus on wealth preservation and generational income for your family, our website, hbgcapital.net, it's got a ton of free resources. I joke that the .com was already bought, so it's .net, but it's harrybobgarycapital.net. There's another ebook on there called Recession Resistant Passive Income. Again, it's completely free. It's packed with tons of content. There's a Calendly link direct on our website. If you want to schedule an intro call or just talk real estate, feel free to reach out. We love having these kind of conversations. And, if you're someone who's interested in investing and getting passive income from recession resistant real estate, we look forward to getting to know you.
Well, fantastic. Well, Brandon Cobb, it's been a pleasure chatting with you. And like I said offline, I'm going to be in Nashville next week, and I'd love to buy you a cup of coffee and talk more about your business because I think you're absolutely fascinating. So thank you very much for your time. I'd love that.
Hey, thank you. It was an honor.
All right.
This has been the Real Estate Underground Podcast, a CT REIA presentation. Don't forget to rate, subscribe, and share this podcast with your friends. If there's a specific topic you want us to cover, post it in the comments. For more information on the Real Estate Underground Podcast or CT REIA, go to realestateundergroundpodcast.com or ctrea.com. Until next time, happy investing.
This has been the Real Estate Underground. Don't forget to subscribe. It helps us grow. Until next time, Undergrounders, remember your real estate journey begins with a simple step forward. Now get to it. Bye for now.